Welcome back to a new video, guys. So today we will have a look at the overall outlook, what possibilities we have over here. We will cover the bullish one and the bearish one, also have a look at various indicators, and yeah, generally why I believe that a bullish scenario from here makes much more sense than a bearish one. And yeah, so let's get started. So this right here was one of three. So we can see, okay, we dropped from here to the 0.5 fib, even wicked into this 0.5 to 0.382 territory. So that's generally, we don't have to go deeper than this. Okay, so if we assume that this was our bottom, then we get this. So this would have been wave 1 of 3, 2 of 3, and now this move here is part of 3 of 3. So let's get into the bullish scenario. So this right here would have been 1 of 3 of 3. And we can see this would have been 1, 2 would have perfectly touched this level here before we start wave 3 up. So that's generally what leads me to say, okay, this is actually still a bullish move. Sorry. Okay, so we have this fib side here, and if we look at the structure, we can see 1, 2, 3, 4, 5. And then from here start the corrective move, which is A, B, C. So let's just take this. Well, let's mark the level here. 1 second. That might be a little helpful. So we will just do it like this. Okay. So if we say this right here is the A wave, the B wave, the C wave could still go to here. So that's pretty much why we still have some orders in this territory here. What we don't want to see is a drop below this low here, because that would invalidate this being a wave 2. Okay, so this is generally the bullish count. So I will just draw it real quick here. 1, 2, 3, 4, 5. It is a very flat 5, but yeah, nothing very unusual. So, and then from here, A, B, C. So this ABC is what you can see in the XRP Shark Charts channel. That's what I called for quite a while. So we can see that this line here was the 0.236 fib of this first move up. So as a wave 2, it makes very much sense to touch this level, maybe touch still this level, because 1.618 can be touched for a C wave, So the 1.618 is usually a target from the A wave, but we don't have to go below there. We have seen, okay, it wicked deeply in this territory here, rejected hard, tried to pump above, retested the 1.272, went up, dropped again. So yeah, nothing really unusual so far, and I will show you also some other things now. Okay, so if we look at this, it still makes sense to be bullish from here. So let's draw it again like this. Okay, we'll delete this one. So we still have this range. So what we really don't want to see is a drop below this level here, because that would invalidate this structure as being the first wave of 3 of 3. A move below this would indicate that this overall move, so the bigger move here, is still a wave 2, which is then short-term bearish. But we will cover that in a bit. So let's have a look at some indicators. So first we start with volume. What we can see here is, 1 second. What we can see is that volume dropped until here. So we had a rise with declining volume. That means that the trend is exhausting. And now we have a dip. So from here we see that it dropped quite significantly, and that the volume, 1 second, so from here we can see that the volume is dropping too. So, oh, okay, let's just delete this. I think we can all see that the volume is dropping quite significantly. That generally means that a trend is exhausting. So the downward trend is exhausting. Pretty much like you could see it here. So from here to here, it dropped quite dramatically, and then we had a rise. So from here to here, it dropped pretty much also. So if we zoom in a bit, we can see it. You see, from here, drop to kind of this level now. But that's only one part of it, so let's just delete this. I usually don't even look too much into those kinds of indicators. Sorry. So the next one we will have a look at is MACD and RSI. So what we can see here is 1 second. Okay, so here this was the SEC drop. So we can see that on this candle here we had a RSI on the weekly of 43. Right now we are at 44. So here it was also at 43. So on the big drop we had a similar RSI level on the weekly like during the SEC drop. If we now go to the daily, it gets even better. Let's make it like this. Okay, so here was the SEC drop. No, that was not the SEC drop. Sorry. This right here was the SEC drop. So we had a... This was the biggest move down on the RSI. On the daily, that was 28.56. And then at the very bottom, from that SEC lawsuit, we had 30.23. So let's check what we had here now. We were at 25. That is very low for RSI on a daily. So right now we are at 38 again. Also here on the MACD we crossed bullish again. Okay, so so 3 indicators we just checked all scream for a bullish continuation from me. Do we have another one? This one on the weekly. Bollinger bands on the weekly. So here we have the entire move. So you can see, okay, test it here. On the weekly it usually never closes below this line. That is quite interesting. Because I really think it never really closed below, except for here. Here it closed 2 weekly candles slightly below, but that was about it. And if we check it now, we are exactly, it's quite coiling up here. It's very, very close, those two levels. It's pretty much like here, you can see, or here. It's quite wide, yeah, okay, not even wide, but still wide here, then gets very, very close, and you have a move up. It gets a little bigger again, gets very close, and you have a move. The move doesn't have to be up if it gets close like this, but as we are still in a bull market here, it makes much sense to just go for higher. 1 second. Okay, so get that done, and now we can have a look at this again. So if we assume that this was wave 1 of 3 of 3, this wave 2 of 3 of 3, then we can pull our fib over here. This is speculation now. So we assume that the bottom got hit here, which is actually possible. We tested pretty much the low we did here. So if we assume that, we know that the next move up would be 3 of 3 of 3, and that move is expected to touch right here. So between $3 and $5, that's our target range, if the bottom is in here. And as we have seen, this A, B, C, it can very much be in here. So yeah, we can still see another drop, but we don't have to see that at all. Like as I said for quite a while now, bottom can really be in here. We don't necessarily have to go for this box. What we don't want to see is a drop below this box, because that would mean that we are still in a corrective pattern, which would then be something like this. So wave 1, and then from here A, B, and the C would be pretty ass then. Let's be honest. I will draw the fibs now and show you. So this is really what we don't want to see. So, okay. So we can see we had this drop here. B wave would have perfectly touched this, which is, yeah, a little concerning. And the C wave would then go for 22 to 35. But by looking at all the stuff I just showed you, it doesn't make too much sense to me to have such a move. So it's technically, it is valid. It is valid, but from an overall perspective, it makes much more sense that we either hit bottom here, or we will hit the bottom somewhere around here. So we could still move a final move down to, yeah, let's say 62 to the 56 level. So yeah, okay, let's even say here 55 to 62-ish. Any move below this, and we really can expect some moves to 35, 30, worst case 22. But so far, everything I'm looking at doesn't really show a move that low. That just doesn't make too much sense for me here. So it is technically valid to look at it. Like I showed you, it could be a huge ABC, but looking at RSI, MACD, volume, the general structure here, it simply doesn't make too much sense to lose this level here and go for way deeper. That just, yeah, I don't see that. So, do we have anything else to look at? Give me a second, guys. Ah, yeah, this one here. We'll reverse it. 1 second. No, we will not reverse it. We'll do it like this. So this is assuming again that the bottom is in right here. And we'll just check how it behaved so far. So we'll check it on the weekly here, so we can see, okay, moved here, tested the point. So what we have is the 382, 0.5 and 0.618 levels are the most important on retraces. We can see that we clearly tested this level here, went up, rejected a bit here, closed above, dropped here, closed above, and then had the final capitulation here. So I think if we look at the daily, I have not really checked that myself yet, but I think here it's even clearer how wonderfully it played with those fibs. So yeah, we can see it. So down here, up, down here, move up, test it here again, test it here, try to break out, didn't manage, test it, and then went for the final one here. So yeah, we leave our our orders in this box for now, but I don't really see us drop below this. Yeah, it doesn't make too much sense to me. So I think Rusty's order is somewhere around here on this particular level here. So yeah, about 56, and the 0.1618 of the ABC here is somewhere around here. So two pretty key levels. If we check at the structure over here, let's make it another color. Let's make those green. Yeah, okay, green is. Let's make them red. Red and red. So 1 second, we will zoom in here and check it. So okay, so the 618 is at this level here, so that could easily be tested. So this right here, this one right here, this one right here, and Rusty's order is here at this one, because that's an order block. Okay. Generally we look very good here. What we don't want to lose is the key level over here. And yeah, I hope this showed you why I remain bullish and why it makes more sense to be bullish from here than bearish. Although we have a technical valid scenario for a bearish move, the overall look supports more the bullish move from here than the bearish one, by considering all the indicators, the general sentiment in the market, the structure we had, the perfect touch of the 0.236, all that stuff indicates that a bullish move is much more likely than the bearish one. But we will still keep an eye on this low here. If we lose it, we will consider the bearish one. Until that, we will not really think about it. Well, I will keep it in mind, but I don't think we will see that. Alright, thank